All right, we are live for another Quick Tip Tuesday. Have a new sign. Check it out. Check it out. So today's topic is FHFA rate increases. What does that mean to you as a buyer? What does that mean to you as an investor? What does that mean for the market? First off, what is FHFA? So FHFA is the Federal Housing Finance Agency. What do? They basically finance the loans for Fannie and Freddie Mac loans. So that is your conventional side. So what this means, this rate increase, what are they doing? This takes into effect April 1st. So this mainly impacts people with higher mortgage amounts, like high loan balances, as well as people getting the second house. So if you're getting a second house, your rate will increase. If you're getting buying a house in an area where you're getting a high balance loan, of course, high balance loan in one area won't be the same as a high balance loan in the other area. So definitely keep that in mind. There's confirming loan limits in each area, different cities, different towns. So rates are going up for those. As if you're aware, rates are going up overall, but the rates are definitely going higher in those specific houses or loans that you're buying. So a high mortgage, if you're buying a lower mortgage home, doesn't really matter. So keep that in mind. But if you're buying a second house, rates will go up. So what I've seen for high balance loans is about 1/4 to 3/4 higher, so 0.25% to 0.75, depending on the bracket, depending on a lot of different criterias with the home you're buying. So that's for that. And for second homes, I've seen things going up from my recollections and speaking to people about a 1% to, I believe, as high as a 3%. I'm not sure if that is realistic, but I would probably say around the 1% mark, maybe a little bit higher. So I don't want to scare anybody, but rates are going up overall. So if you were on the verge of either buying or refinancing your house, I would definitely take that in consideration right now, because rates are on the way up. I don't foresee them going down. They have projected rates going up for first quarter, second quarter, third quarter, and fourth quarter. So they're going to continue to go up for the rest of the year. So if you have plans or putting them on hold for a lot of different reasons, I will definitely want you to revisit that, because when rates go up, a lot of things are impacted. Number one, your mortgage payment will be higher than a lower rate, of course. Number two, you would qualify for less of a loan because the mortgage payment is higher. That means you qualify for less because you can afford the higher mortgage. Is it a buyer's market or a seller's market? Still a seller's market. We'll see when things start to shift. But it's definitely still a seller's market for the most part of the country, I would say. From my understanding, I know a lot of people are still going to bidding wars, so there's still a lot of buyers out there and not much supply. So it's definitely still a seller's market. Unfortunately, sellers are still in control. When is the best time to buy? The best time to buy is 5 years ago. Second best time is now. I would definitely still buy now. Rates are still close to historical lows, so don't get scared because they're going up. It's not a huge jump. You won't really see a huge difference in mortgage payments right now because there's a little shift of an increase. But if you continue to wait, then yeah, that would you would definitely see that difference, because while rates are going up, home prices are still going up, and the dream home you could have qualified, let's say, at the end of last year, if you keep waiting, you're not going to qualify because rates and prices continue to go up. So definitely keep that in mind. If you were on the verge before, I don't know if you want to keep waiting for rates and for home price to continue to go up, but I would definitely keep whatever fear you have, whatever was stopping you before from buying a house, thinking of waiting for some type of correction, waiting for something to pass. As you can see, we've been on this for some time, and you shouldn't wait any longer. Let's see what else I wanted to cover. I wanted definitely to keep this short because I just want to bring awareness to everyone. Rates are going up, and they're not coming. I don't think they're coming down. So if you were waiting before, the time to buy is now. It was 2 years ago, but second best time is now. Let's see. I want to make sure I covered everything that I wanted to discuss. Yeah, that's pretty much it. I think it looks like I answered most of the questions. So yeah, I want to definitely keep this short and sweet. I know today's topic is not something everyone is familiar with. The title itself. Is the credit requirements still the same? Yeah, credit requirements are still the same. Definitely keep in mind, for depending on how much debt you have, that can impact what you qualify for. So there's a lot of moving factors when a pre-approval is calculated. So we look at what comes in, like your income, and what your minimum debt obligations are. So basically, if you have a credit card for $5,000, but your minimum payment is only $200, we look at the $200 minimum debt obligations. And if you have any forbearance or any deferments on your loans, we have to put some type of payment. So each loan is a little different how it's calculated. But for example, student loans can be one example. For FHA loan, they look at 0.5% of what that loan is. So for example, $100,000 student loan, which more people have than you probably expect, that would be $500 a month for the debt obligation. And with rates going up, that your debt to income ratio will get tighter, and you would qualify for less because the mortgage payment will go up. So definitely keep that in mind. So yeah, that was what I want to discuss for today. Hope everyone has a great rest of your night. Get ready for keep crushing the week. And if you have any questions or any topics you want me to discuss for next week's Quick Tip Tuesday, please let me know. Just going to show off the sign one last time. Enjoy the rest of your day.